and welcome to IOL Chemicals and Pharmaceuticals Q3 and 9M FY2022 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Monish Shah from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Lizanne. Good afternoon, everyone, and welcome to IOL Chemicals and Pharmaceuticals Limited's Q3 FY22 results conference call. Today on the call we have Dr. Sanjay Chaturvedi, CEO, Mr. Pradeep Khanna, CFO, Mr. Abhay Raj Singh, VP and Company Secretary. I now hand the call over to Dr. Sanjay Chaturvedi for his opening comments. Thank you, and over to you, sir.
Thank you, Manish. Very good afternoon to everyone. I thank you all for taking the time to participate in this earnings call. I trust you've had the time to read the earnings document. I'm certain that you will have many questions, but before we take up these questions, I would like to shed some light on the industry, what is our business, the kind of, what are my own perspectives on the performance of the quarter, and subsequently my colleague, Mr. Pradeep Khanna, our CFO, will provide a lot more granular details on the financial performance. So let me begin by saying that, our non-ibuprofen pharma business has performed well, better compared to the prior period, and contributed about 17% to the quarterly revenue for the company, and overall about 37% of our revenue in the pharma segment now comes from non-ibuprofen. During the quarter 3, IOL CP has filed 4 DMFs with US FDA. We got 6 products GMP certification from MOH, Russian authorities. Additionally, we also got approval from the Korean FDA for 2 products this quarter. All these regulatory approvals will enable the company for increased market penetration and add value to the business. The margins have been on stress on account of continuous volatility in the chemicals pricing and lower volumes of the ibuprofen business. Overall, the quarter 3 results show significant improvement from quarter 2. Our sales grew by a modest 3%, but our PAT numbers grew by 29%. With this, I would like to hand over to my colleague, Mr. Pradeep Khanna, our CFO, who will be talking more in detail. Over to you, Mr. Pradeep.
Thank you, Dr. Sanjay. Good afternoon to all. A warm welcome to IOL CP 9 months and third quarter financial year 22 earnings call. I will take you the highlights for the quarter 3 and 9 months ending financial year 22. The total revenue for the quarter increased by 3% to rupees 564 CR as compared to rupees 548 CR in quarter 2 of financial year 22. In quarter 3 of financial year 22, the EBITDA was at rupees 68 CR, and in 9 months ending financial year 22 was at 238 CR. Similarly, EBITDA margin in quarter 3 of financial year 22 stood at 12.1% and 14.6% for 9 months. Depreciation for the quarter was rupees 11 CR and rupees 32 CR for 9 months ending financial year 22. Profit after tax for quarter 3 of financial year 22 stood at rupees 40 CR and rupees 130 CR for 9 months ending financial year 22. The PAT margin for the third quarter was 7.1%, and for 9 months for the financial year 22 was at 8.4%. With this, I would now request the moderator to open the forum for question answer session. Thank you very much.
Thank you. So before we open up for the Q&A, just would like to inform you there's a slight disturbance from your line.
Is this better now? We turned off one piece of electronic equipment. This should have helped.
Sir, this is much better. Thank you.
Okay. All right.
Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question, you may please press star and 1. The first question is from the line of B.R. Vora from Third Eye Reality and Consultant Private Limited. Please go ahead.
Hello, good afternoon, and thank you for the opportunity. My first question for you is, do we have any clarity on what the capex plans are for the year and ahead?
Your question is regarding the capex plans, correct?
Yes, capex plans.
Yeah. So far, we have spent about 116 crores, and this is in line with, what we typically do in a year. And, going forward, we do expect that we will be spending about 150 crores or so annually.
Okay, and my follow-up question will be, why is there no large-scale capex plan, even though the company has over 300 crores on the balance sheet and ample access to cheap funds, because growth is being compromised due to distribution of dividends and not reinvesting back into the business?
So I think it's an excellent question you've asked. Let me give you, 2 data points and begin to answer that. The first data point I'm going to give you is that if you look at the API business, what matters is the cumulative capex rather than quarterly or year-on-year capex. Last several years, we've spent over 400 crores on capex. Okay, many of those assets are still waiting to be fully utilized. So rather than jump in and create more assets, we are taking a relook at, what kind of portfolio we want to have for the future. So what you will see in the coming years is the existing assets that have already been deployed being utilized more effectively. And then the new assets that we put into place will be for some of the new products that we are considering.
Okay, and for this, the existing assets, what utilization level are we working at right now?
So I would say that, any number from 65 to 75% is good, depending on which asset, which block, which product.
Okay, thank you for answering the question.
And a question that you've not asked, but let me talk about that. Once we achieve asset utilizations in excess of 80%, that's the point at which we would look at deploying new assets.
Okay. And is that for all of the molecules, or is that only for the other API side?
No, that is for all of the molecules that we have. On ibuprofen particularly, we already have the world's largest capacity. Today, we are not actively thinking about expanding that capacity. We are thinking of expansion in new molecules to actually de-risk the company. And ibuprofen is our bread and butter business. We will continue to be world market leaders in ibuprofen API. But our investors expect us to de-risk the business away from ibuprofen, and that's the direction that we are taking.
Okay. Okay, thanks.
Thank you. The next question is from the line of Chintan Chheda from Quest Investment Advisors Private Limited. Please go ahead.
Yeah, hi. Good afternoon, sir.
Good afternoon, Chintan.
Yeah, thanks for the opportunity. So my first question is, can you just give the split between the volume and price growth for ibuprofen over second quarter?
So I would say broadly the volume in the Q3 was about 10% more than in Q2. Pricing continues to be stable or somewhat negative. So, ibuprofen, I think we have bottomed out in the business, and both in terms of volume and in terms of pricing.
Okay. But sir, just wanted your view, like what are the pricing trends that we are seeing for the new contracts in ibuprofen?
So I would say that the most of our business is in a combination of domestic and semi-regulated market. That's where the contracts don't really exist. The contracts are applicable primarily for the regulated markets, and in those markets we are expecting annual contracts in the range of $11.5 a kilo.
Okay. And the RM for ibuprofen, like your IBB, how are their price trends?
So IBB is fairly stable. There was, I think, in Q2 and Q3 a slight run-up in manufacturing costs. And I would say that rather than raw material pricing, it was more a function of energy pricing. The utility costs have gone up.
Okay, sir. That's it from my side. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Sheikh Mohammed from Aman Investments. Please go ahead.
Hello. Good afternoon, sir.
Good afternoon.
Yes, sir. My question is...
You will have to speak up a little bit. Your voice is very feeble.
Am I audible?
Now you are.
Sir, my question is, among the API we have in pipeline, any other products we are planning to launch this quarter or this year? Means you have mentioned clopidogrel, paracetamol, fexofenadine, apixaban, among them.
Yeah, so I would say we are already having products developed, validated, existing capacities. The focus is on utilizing these capacities rather than launching new products right now. Yes, we do have a portfolio of new products under development. I don't anticipate any of the new product launches in this quarter, but towards the later part of next year, yes, certainly we'll be looking at some of the products. And rather than give you the specific of which product, the list that we've shared with you of products under development, it will be from amongst that list.
Okay, so my next question is, are you expecting further improvement of margin in next quarter or upcoming quarters? In terms of
so this next quarter, as in Q4, we expect a slight improvement in margins. And for next year, we certainly expect an improvement in margins because as the business de-risks itself away from being a one-product company, we will see an expansion in margins.
Okay, sir. So my next question is, if we see the margins, it has shrunk a lot in last week.
You need to speak up again. I'm not able to hear clearly what you're saying.
If we see the margin, sir, it has shrunk a lot in last 2 quarters, and that is mostly from chemical side. So are you planning to demerger chemical and pharma business?
No, we don't plan to demerger the chemicals and the pharma business. These two businesses are closely interlinked, even though they are very separate in terms of their manufacturing footprint. Many of the customer base is common. Many of the chemistries are common. We share the utilities, so we don't plan to demerger the two businesses. But having said that, one needs to fundamentally understand that specialty chemicals and pharma are very different types of businesses with very different values and drivers. Let me explain and elaborate on that for just a few minutes. On an average, specialty chemicals as an industry will run at 10 to 15% margins, whereas the API industry will run at like 15 to 25, 30% gross margins. So what that also means is that the amount of capex required to generate an asset that will give you revenue is different in the two industries. In the API industry, typically for every 100 rupees that you deploy in capex, you will build between 100 and 200 rupees of business over a sustained period. Whereas on the API side, this was the number for the API side. On the chemical side, for every 100 rupees that you deploy, you can create up to a 3, 4, even 500 rupee business, although at a much lower profitability level. So, it's a question of philosophy rather than what's a better quality business. They are both very good businesses.
Okay, sir. So my next question is, last quarter con call, I have asked regarding the cash reserve utilization. You told that we'll be coming out of the plan in December or January. So actually, I have called in your customer relationship officer also, but he told there is no information regarding that. So what is the
Yes. So I'll give you an update on that. We are in the final stages of deciding to deploy the capital, and of course, this new wave of Omicron has delayed some of our decision making because a lot of our employees were out for a sustained period. So I would suspect that sometime this quarter we will finalize our plans and maybe by next quarter give you an update.
Okay, sir. Thank you. Sir, another question is, I think this quarter we have achieved the highest revenue in terms of upper side. But if you see in the bottom side, it has shrunk a lot. So when we see record number of profit.
So, what you're asking me is to do actually gazing into the crystal ball. If I had visibility into what's going to happen to raw material pricing, what's going to happen to logistics, what's going to happen to fuel costs, I would give you a very clear answer. What I would leave you with is the following. As an industry, if I look at the API industry, 15 to 20% EBIT numbers are sustainable. Investors who are looking for EBIT numbers of 30% and beyond in the API industry are not sustainable.
Okay, sir.
I hope that answers your question.
Yeah. Thank you very much, sir.
Okay.
Thank you. We'll move on to the next question. That is from the line of Zen Banihali from Odyssey Capital Management. Please go ahead.
Thank you. So my question is regarding the raw materials and on that front, how much of our dependence is on China for the raw materials?
I would say the short answer to that question is we don't have a lot of dependence on China. Okay? We have, certainly on metformin, we buy some raw material from China, DCDA, whereas on IBU, I have almost no dependence on China. When I look at my other chemical business, which is a significant part of my overall portfolio, I am importing certain raw materials, but none of them are from China.
Okay, so will it be right to say that the increase in shipping prices has had an impact on our margins?
Yes.
And to what extent would that be? I mean, considering that...
I'm trying to deconvolute in my head between chemicals and pharma, but I would say it is fair to say small single-digit percentage points is attributable to logistics and shipping costs.
Okay, so the question is, in future, will it be possible for us to be less dependent on exports and be more self-sustainable, so to say?
I wish I could give you a very clear answer on this because the reality of business cycles is much more complex. They say that the fluttering of the wings of a butterfly in Indonesia causes, a typhoon in the US. We live in a global interlinked economy. It will be very hard to create a business where we are making 100% of products in India for the Indian market based on Indian raw materials. So, in fact, I think that may perhaps be a higher risk business. So, having a level of interdependence is really a true reflection of what global businesses are like, and we will continue to have that interdependence.
I understand, sir. So my second question would be, sir, what percentage of our revenue is coming from metformin?
Metformin. Broadly, I would say 37% of the pharma business, so 37 or 46. So roughly 16-17%.
So will it be right to say that after ibuprofen, metformin is the second biggest revenue generator for us?
Yes.
So as we see that we are decreasing our dependence on ibuprofen, so will that go to metformin? I mean, that share, will we increase our dependence, not dependence, but will we see an increase in the revenue percentage from metformin in future?
So no, not really, because I think the way I would frame this is, I will see a relentless focus on ibuprofen with diversification into a portfolio of other APIs that de-risks the entire organization. I will not, move away from ibuprofen and risk the organization on metformin. I would actually de-risk the overall organization. And it's not just metformin. It's metformin, it is clopidogrel, it is pantoprazole, it is levetiracetam. It's a host of other products that I'm commercializing.
Understand. Thank you so much, sir.
Okay.
Thank you. The next question is on the line of Anupam Agarwal from Lucky Investments. Please go ahead.
Yeah, hi sir, good afternoon, and thank you for the opportunity. I just want to continue from the previous participant, sir. If I see FY24, what sort of sales mix do we see in chemicals, ibuprofen, and other APIs?
Okay. So let me begin by saying that the chemicals business is unique in the way that the top line of the chemicals business to a large extent depends on the raw material pricing. So, on the chemicals business, the big product in our portfolio is ethyl acetate. Yes. A big component of that price is determined by whatever is the raw material price for acetic acid and ethanol. Mm. And let me tell you that acetic acid prices have been highly, highly volatile. So, rather than just talk about this year, I'll give you a historical perspective. Historically, acetic acid prices have ranged all the way from 30 rupees a kilo to 85 rupees a kilo. When the price of acetic acid is in the range of 30 rupees a kilo, my ethyl acid prices are in the 60s. Whereas when the pricing of acetic acid touches 80, 85 rupees a kilo, the price of ethyl acetate touches 105, 130 rupees in the market. So, it's hard for me to predict, but I will tell you directionally what we are doing. Directionally, I have a finite capacity, which is roughly about 108,000 tons for ethyl acetate, and I'm running that to pretty much full capacity. Okay. So the revenue of chemicals business is based on what the raw material pricing would be. On the other hand, I am strategically putting a lot of focus in growing the pharma business for IOL. So, directionally where we want to grow is at least this, 60% of our portfolio should be from the pharma, whereas 40% should be on the chemical side. But because of the volatility in raw material pricing today, the answer seems to be flipped.
Okay, so sir, what is the current price of acetic acid and ethyl acetate at current situation versus if you will compare it to Q2?
Yeah, so currently ethyl acetate is in the range of about I would say 100 plus. No, acetic acid is perhaps in the 60s, late 60s, mid 60s, and ethyl acetate continues to be 115, 110. This is really so volatile that it's changing on a weekly basis. So I'm not trying to be evasive. I'm just trying to hedge an answer that captures and reflects the true volatility of the raw material.
Sure. So, sir, if I have to break down the 108,000 tons, what capacity, what volumes are we doing on contractual basis and what is on spot basis?
So we don't have any contracts as such on the ethyl acetate. What we have is long-term customers who give us, who share visibility in terms of their volume offtake.
Okay. Okay. Sir, coming on CapEx, what sort of CapEx do we see coming on stream, let's say, by the end of FY23, for us to see the next leg of growth in FY24? From the pipeline, which are the products do we see clear visibility that we'll be launching them, say, let's say next year, and the potential revenue coming from those?
So I would say you've asked me 3 or 4 questions in there. The first one is really about CapEx. On a sustained basis, we will do about 150 crores of CapEx year on year. Your second question was, what are the products on which this will be deployed? So all the plants that we are now building are actually multi-product fungible facilities. So we will be building, multi-product API facilities to kind of de-risk the overall organization because, you know as well as I do that, certain APIs stay in business and then because of a variety of reasons that could be market related, regulatory related or raw material related, the particular API falls out of favor. So we are trying to ensure that we build every API plant to manufacture a handful of APIs and then also de-risk that. So if you look at our new product portfolio, the new capex that we deploy will be to support the products that are in the pipeline.
Right. So in the earlier Concall, I was going through the notes. You mentioned that the new products that we'll enter into will largely be backward integrated as well.
Yes.
So how are we on that?
So we are well on that journey. So the way we launch products is, through an iterative process. We develop a product where we buy certain KSMs from the outside and then test the market. Once the commercial uncertainty is addressed, at that point we put our plans in motion to backward integrate. Our objective is to add top line, and once the top line is addressed, we de-risk the business by backward integration and then enhance the bottom line. So this is really on a case-by-case basis, and the level of backward integration that we do changes from product to product. So it's very hard for me to give you, one straight answer and say, I will backward integrate in half my portfolio to 3 steps. In some products, I will backward integrate to 5 steps, and some I will backward integrate only to 2 steps. And then in certain other products like metformin, backward integration is not an option. I will continue to be like every other metformin player where we all buy DCDA from China.
Understood. So last question, the cash on balance sheet in 9 months?
The cash on balance sheet that I have in 9 months is roughly around 350 crores.
Okay, sir. Thank you. That's all from my side, sir. Thank you so much.
Welcome, and good to have you back.
Thank you. The next question is on the line of Mayur from Profit Mart Securities. Please go ahead.
Thank you for the opportunity. I just want
Need to speak up, Mayur. I'm not able to. You're not very audible.
Okay. Wait. Now my voice is audible?
Slightly better. We'll manage.
Okay. Can you share your thoughts on demand forecast and how do you see quarter 4 now?
So quarter 4, we expect to be similar to quarter 3, slightly marginally better, both in terms of demand as well as profitability. In terms of demand next year, we do see a slight increase to this year by about 10% or so. And I'm specifically talking about ibuprofen.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Chirag from Ratnatraya Capital. Please go ahead.
Hi, good afternoon. Thank you so much for the opportunity. So my question is just around the global perspective on ibuprofen. Just wanted to understand, given the fact that we are market leaders, and at this level of pricing, our margins are at least slightly below what we would want them to be. How is the supply side taking this overall? And given that we are the large part of the supply, do we have any influence on price from that perspective, or is it that our cost curve is very different from the new plants that have come up? I'm just trying to understand what the scenario is on the supply side, if the question is clear.
So let me talk both about the demand side first and then the supply side. On the demand side, the demand is, pretty stable. There is, there was a dip in the market this year, and it is actually inching its way forward. On the supply side, there is a little bit of a shake-up in the sense, but the overall, so if you look at the high-level headlines, the demand side is stable, the supply side numbers are stable, but the players on the supply side have changed somewhat in terms of relative ordering. And what I mean by that is, happy to say IOL continues to be the numero uno player in this category for this product. Our supply side is consistent at 12,000 tons a year. Our demand side has gone from 600, 650 tons a month to about 750, 800 tons, and we continue this to be stable. BASF is certainly back in the market. Because BASF is back in the market, it is putting pressure on other players that are not sufficiently backward integrated. And I suspect that some of the smaller players that you have in India that have capacities in the range of 50 tons a month will continue to operate and play a niche role for limited supply to limited customers.
Got it. That was very helpful and clear. Just on the BASF question only, the new focus and the new plant, is the cost curve a lot different, or is
sorry to interrupt, Mr. Chirag. Sir, your audio is not clear.
Hello, is this better? Hi. Sir, can you hear me?
Yeah, please repeat your question.
So on the BASF new plant or the other additional capacity that you have seen, is the cost per ton of that capacity, operating that capacity, a lot significantly different from what we have, just given that they're newer, or broadly does the cost curve remain similar across the new capacities and the capacities that we have in progress?
So the new plant that you're alluding to is the plant at Bishop. This is the BASF North America plant. Is that correct?
Yes, sir.
Okay. So at that plant, they have added capacity, and they've actually released a very nice video. I would encourage you to go see that on YouTube. It clearly articulates that it's a fully automated plant. Given that it's a very automated plant in the Western world, we can use our best case guess to figure out what the capex of that plant would be. And I think this is a substantial capex that they've undertaken. And given their cost position, and given our cost position and customer base and current capacity, we are very competent and confident to take them head on in this competition.
So one of the part would be the capex, but I'm actually interested to know marginal cost and capex wise. Do you think that there is a substantial advantage, or do you believe that probably is not the case?
So we believe that they are at somewhat of an advantage in terms of OPEX, but the reality of business is that it's CAPEX plus OPEX. So when you put that together and then combine the fact that for many other parts of the world they need to ship their products from US, and given where supply chain situations and logistics are, we are very confident of competing with them.
Perfect. Thank you so much, sir. This is very clear. Thank you for the opportunity.
Okay.
Thank you. The next question is on the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. So firstly, can you also highlight what is the spread of the ibuprofen prices between regulated markets and semi-regulated markets? Is that widened or more or less stable?
So it is stable, and as a general rule for commodity APIs, there is hardly any difference in pricing between regulated and semi-regulated markets.
Okay. So even for semi-regulated market, it will be more or less at $11.5 per kg kind of a pricing for ibuprofen.
Yes, there are some differences. Certain customers, the overall difference is almost never more than 10%.
Good. And with this supply side continuing, either with the addition of capacity or by the new player entering, and assuming that the demand would be more or less single digit, maybe 6-7%. So, what kind of gives confidence that the pricing will remain stable or we'll have a better volume offtake going forward?
Okay, there are two things I would say to that. One is that the pricing had bottomed out. If you look at the Q2 profitability numbers of all the ibuprofen players, they were about the lowest that they've been in a pretty long time.
Okay.
Second point I would say is that there is a reorientation in the market players in the industry. There are roughly, 4 major players with a handful of small players. What is happening is that one of the major players, which is BASF, has expanded their capacity, and the other major player from India is softening their ibuprofen business, and the smaller players are very niche players. So, the Chinese supply to a fixed set of customers. BASF is present mostly in regulated markets, and so we occupy a very nice position both in the domestic market as well as the semi-regulated market. And now with our approvals in the regulated markets, we are penetrating that as well.
Understood. Interesting. And how is the supply demand scenario for the metformin as a product?
So metformin, I would say, there is certainly, in many ways almost an overcapacity in India. But having said that, when you look at molecules like metformin and ibuprofen, these are like such giant molecules in terms of volume that even a 4-5% growth in volume is sufficient to add to the market and absorb the capacity of new players.
Okay. But the pricing, if you could shed some thought on.
So the pricing for metformin has certainly gone up. If you look at DCDA pricing, which is a key ingredient and raw material, that molecule had gone from like $1,200-$1,400 a ton up to about $4,500, even more than $5,000 a ton, and now that is stable at about $3,500 or so.
Understood. Thanks a lot for this.
Okay.
Thank you. The next question is from the line of Chokalingam Narayanan from BNP Paribas Mutual Fund. Please go ahead.
Yeah, hi. Thanks for the opportunity. Now, the question is with regards to the other pharma, products. So you mentioned that now almost more than 1/3 of the pharma business is coming from the other products outside ibuprofen. So if you could kind of talk about the other, products which are key there, and what sort of revenue levels or volume levels that you're currently operating at, and where do you see it?
So, I think I'm happy you asked me that question because that's kind of a very significant business achievement that we have accomplished this quarter. Let me give you a historical perspective. Last year, the non-ibuprofen business contributed less than 200 crores to the revenue of the company. This financial year is going to contribute something in the range of around 350 crores. Now, from less than 200 crores to 350 crores is a significant jump. And this is not just one product, it is a basket of products. It has clopidogrel, it has fenofibrate, it has lamotrigine, it has pantoprazole, so metformin. So I would not encourage you to look at this as one product. You look at this as a portfolio of products. And what I would encourage all the investors of IOL to do is take a step back and look at the 30,000-foot view. And the 30,000-foot view is how the company has evolved over a 2 or 3 year period, rather than what are the numbers this quarter, what are the numbers that are going to be next quarter. So what we've achieved is we continue to grow both the chemicals and the pharma business. And within the pharma business, what is driving the growth is actually the non-ibuprofen part of the pharma business, while we continue and manage to maintain our leadership position in our bread and butter business, which is ibuprofen. So I hope that gives you a better perspective of what we are doing. So over the quarters, roughly, if I look at non-ibuprofen business, Q1 gave, about 12% of our revenue came from non-ibuprofen. This quarter, 17% of our revenue has come from non-ibuprofen, and it is 17% of a higher number. So, overall pharma, as the previous gentleman pointed out, more than a third of the business is now coming from non-ibuprofen, and we continue to grow this business, and our expectation is that next year, more than 40% of the total pharma revenue will come from non-ibuprofen. Does this answer your question?
The line for the current participant seems to have dropped off. We'll move on to the next question. That is on the line of Bob from Falcon. Please go ahead.
Yeah, hello. Regarding ibuprofen, is the issue primarily one of inventory, or has the molecule lost any market share to other painkillers?
I'm not sure I understood what you meant. Is it a question of inventory, or has the molecule lost its sheen?
Yeah,
Is that what you said?
Yeah. I mean, is it purely, I understand over the past year or so there was overstocking, right, due to COVID. And because of that, the volumes and prices dropped. But are there any other fundamental factors at play, such as paracetamol gaining market share over ibuprofen?
So, there are a couple of these factors working in tandem. One is clearly there was a lot of overstocking that was in the previous financial year and the Q1 of this financial year. Having said that, on quarter by quarter, we continue to see, kind of growth. So Q2, it has pretty much bottomed out. We've added significantly in Q3 in terms of volume, and we are confident that in Q4 we will grow this more modestly. And with the new approvals that we have with certain customers, next financial year promises to be certainly better. In terms of competition from paracetamol, yes, there is certainly competition from paracetamol, and I think there are two factors that played into this. One was a research report that came out from a group of French doctors that indicated that COVID management was better through paracetamol than ibuprofen. 6 months later, they retracted that report, but by then, paracetamol had already, kind of flooded the market, so that damage was already done. But I think going forward, both paracetamol and ibuprofen will continue to play a role in COVID management.
Okay, right. Thank you.
Thank you. The next question is from the line of Zen Banihali from Odysseus Capital Management. Please go ahead.
Thank you for the opportunity again. So my question is on the customer front.
On the what front? I couldn't hear that.
On the customer front. So will it be right to say that most of our customers, especially in the chemical business, we are in a long-term contract with them?
No, we don't have long-term contracts then. What I would say is we have a very solid relationship with these customers where, for several years, almost a decade, we've been doing business with them. So we have a very good understanding of what their demand is, what kind of offtake will they do. So we don't have long-term agreements with them, but we have a long-term relationship with them. And we sell directly to customers, not traders.
I understand. So in event of a price hike, how successfully are we able to pass on the price hike to the customer, and how much time does it take? I mean, what is the gap duration?
So typically, we are very fair, open, and transparent in the way we do business with our customers, because a lot of you're specifically talking about the chemicals business. Is that correct?
Yes, in the chemical business specifically.
Yeah. So on the chemicals business, if you look at my raw material, acetic acid, which is a key import, I have to import that material months in advance. Okay. Mm-hmm. And I have to keep sufficient stock and inventory at, within my facility. So I have a very, very open idea of, I have a very open visibility as to what the pricing of ethyl acetate is going to be based on my procurement of acetic acid. And that is something I negotiate months in advance with customers. So it's not that I'm doing spot business, but because I know what price I'm buying the raw material at, I have a fairly good visibility that a material I book on a ship today will land in 2 months. It will take me another week or so to get it to my facility. I will convert that within a few days, and so it will reach my customer. So typically there's a phase lag of 2 to 3 months, and I have a pretty good visibility that what I'm buying today, based on this, what will be the price of ethyl acetate 2 to 3 months from now, and based on that I do my order booking.
Okay, thank you. Thank you so much, sir.
Mm-hmm.
Thank you. The next question is from the line of Manish Munda, an individual investor. Please go ahead.
Hello. Good afternoon, sir. Am I audible to you?
Yes, Manish, I can hear you.
Sir, as you said, we have no growth or little growth in ibuprofen business. That means, can we say that we don't have any pricing or competitive advantage in that segment?
You are talking about ibuprofen?
Yes.
No, I do have a competitive advantage. My competitive advantage is my scale. My competitive advantage is my experience. My competitive advantage is the talent and the team. My competitive advantage is my level of backward integration. My competitive advantage is the relationships I have with customers. And, it's really all of these things put together that give me an edge. It's very hard to put a dollar value to each of the competitive advantages I enumerated.
No, but we don't have a pricing power, no, sir?
So, pricing power in commodity APIs is almost unheard of. You only have pricing power when you are a monopoly. And you're right in your assessment that ibuprofen is not a monopolistic business.
My second question is that we are especially backward integrated with all of our or many of our products. So can't we backwardly integrate with the acid prices that is quite fluctuating, as you said?
So you said, why don't we backward integrated with?
The acetic acid prices that is regularly fluctuating.
See, acetic acid is a product that comes from, 2 different manufacturing processes. One, you get it from alcohol, which is actually a more expensive process, and the other is from carbon from methanol route. So, and methanol is not readily available in India. So, ability to backward integrate into acetic acid is financially not a viable option for any of the Indian players.
Okay, thank you, sir.
Mm-hmm.
Thank you. The next question is from the line of Gagan Thareja from ASK Investment Managers Private Limited. Please go ahead.
Good afternoon. Am I audible?
Yes.
Yes, sir. On your chemicals business, this year, because of the price movement itself, you would have had some strong growth. If you could just delineate year-to-date chemicals growth into volume and price, one, and second, if you could also give us some idea of, the spreads on the chemical business this year compared to last year for the 9-month period.
So there are a couple of questions you asked me in there. The first one you asked me about volume growth. Volume versus last year is more or less flat. I'm running my asset at, pretty good asset utilization. So there is really no scope for me to add to that except maybe a few percentage points. second question you asked me was about, the financial performance of this year versus last year on the chemicals business. The top line is certainly a lot more this year, and that has to do only with the pricing. Then you asked me, the third question was about the spread. So, last year the spread was about in the 20 rupees a kilo range. Right now it's in the 15 rupees a kilo range.
Okay.
And I hope that answers your question.
Yeah, I mean, when you say 15 rupees, is it as of today, or is it the average value of the spread through the year? 9 months.
The average value of the spread through the year, 9 months.
Thank you for clarifying that. And as you sort of move into the next, while one can't take a very clear get a clear understanding of how pricing will move. Obviously, once the Winter Olympics are through, there's a reasonable inference. Some of the capacity in China, which is out of circulation, will come back, and there will be some sort of easing of the supply chain distortions that we've seen. In keeping that as a baseline scenario, would it be reasonable to surmise that pricing would soften further in the chemicals business? And if that happens, would it be reasonable to surmise that spreads would also soften a little bit, or you think that's out of line?
So I would say that what you're saying is spot on. With the Olympics ending and perhaps some of the capacities coming on stream and easing of logistics issues, there will be some easing of raw material pricing. When that happens, yes, there will be easing of some top line for our business as well, because as the raw material price comes down, the price of ethyl acetate also softens. But I think the spread doesn't change as much. It will be a few percentage points. So, in other words, I think the indirect question that you were asking me is there a potential for us to lose top line if the prices soften? And the short answer is yes, there is a potential for us to lose top line, but we will not lose bottom line in absolute numbers. Let me also add that we have plans in place to evaluate and introduce new products, and that's what we will do to make up for any potential fall in top line. And that should only add and supplement my existing bottom line numbers.
Right.
Does that help?
Yeah, that helps. Also, if I take a 5-year view of your business, and as it evolves and the salience of your pharma business increases, and within pharma the salience of non-ibuprofen business further increases, would it be again a reasonable surmise that higher gross margin business is increasing in salience, and therefore keeping apart the short-term volatility in a 5-year period, your blended margin should be on an upward trajectory? And if that is the case, can you maybe give us some idea of where the salience of pharma could be headed, and consequently where the blended margins could be headed?
If I didn't know any better, I would actually say that you've been eavesdropping into our strategic plan conversations and the 5-year plan that we are making. So you're absolutely spot on. I think 5 years from now, it would be fair to say that ibuprofen would actually be a minority part of the overall pharma business. And you're also right on in saying that not only will it de-risk the company from just one product in the API portfolio, but the other businesses, as we move more into the regulatory markets, this whole API business is really about capacity, manufacturing, and technology coming together. And you start the business typically by domestic, less regulated markets. And as the quality of customers and quality of markets improve, the margins also improve. What also helps in improving the margins is better asset utilization. So I would say that for all the other APIs over a 5-year period, if I say that all the new products that I introduce run at asset margins of at least 70% or so, with at least respectable number coming from regulated markets, it is fair to say that the margins will improve. And I do believe, whether it's a 5-year plan or a 3-year plan, we will get to 20% plus EBIT levels overall as a company.
Right. And finally, sir, would this changing sales mix have some impact on your working capital as well, or you think that's not a possibility?
So it will have some impact, but not a significant impact. My working capital will be pretty stable.
Thanks a lot for your answers. I'll get back in the queue.
Thank you. We'll move on to the next question. That is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Yeah, thanks for taking my question. I wanted some clarity. You said that volume growth has been flattish Y on Y or Q on Q?
Can you repeat your question, please?
So there is the pricing, the spread you said from 20 kg, the spread has improved. So I believe that Y on Y pricing has been better. And volume has been flattish, that's what you said, on a year-on-year basis?
You are talking about my chemical business and specifically for ethyl acetate within the chemicals business. Is that correct?
Yes, for ethyl.
So what I meant was my volume is fairly flat year-on-year. My spread has actually gone down from about 18-20 to about 15.
Okay. Now this spread has come up to 50.
15. Okay,
1.5. Okay, sorry. Yeah. Okay. And secondly, on the ethyl acetate price, you said this would be roughly around 100 to 110. So yeah. What was the price last year?
Last year the price was, it ranged from around 65 to 70 rupees a kilo.
Okay, and for metformin, the price you mentioned from 4,500 to 4,500 to 5,000. What was the price?
That was the price I had given for DCDA, the raw material for metformin.
Okay. So any clue what was the price last year from DCDA?
So metformin prices have gone up, and that's really due to the run-up in RMC pricing. Today, I would say in the domestic market, 320, 350 rupees a kilo is the existing domestic price for metformin, and last year this price was in the 210, 205 range.
Okay. And you mentioned the BASF adding capacity, but what kind of capacity they have added?
So they've added about 5,000 tons.
Okay, so I thought because 5,000 ton anyway that was supposed to come up, but I thought that it is bigger than this. So this is also 5,000 ton.
Yes.
I'm given. Okay.
Yeah.
Okay, fine. That's all from my side. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you very much. I thank all the participants, and I will leave you with the message that your company continues to demonstrate good business performance despite some very strong market headwinds. We continue to invest for building a stronger future through our capex, our churning of the product portfolio, our increase in regulatory filings, and the approvals as well. Q4, you should expect a slightly better performance than Q3. And over the next year or so, we will add to our portfolio of chemical products. We are evaluating what products to add. Parallelly, we will grow the non-ibuprofen API business substantially, and with the increased penetration into the regulated markets for all of our APIs will help enhance profitability. So with that, thank you all for joining, and